Eugene Fama is a giant in the world of finance. His contributions have shaped modern financial theories and practices. He won the Nobel Prize in Economics in 2013, a testament to his groundbreaking work and influence in the field. His work on the efficient market hypothesis, or EMH, fundamentally changed how we think about markets and their behavior. EMH posits that asset prices reflect all available information, making it nearly impossible for investors to consistently outperform the market. This theory has profound implications, suggesting that beating the market is more about luck than skill. Fama has strong views on Bitcoin. He is highly skeptical of its long-term viability and potential as a currency. He doesn't believe it's a viable currency or a good investment. His views carry significant weight in the financial community. Investors and economists pay close attention to his pronouncements, often using his insights to guide their own decisions. Fama's skepticism stems from his deep understanding of markets and their underlying principles. He sees Bitcoin's rise as largely speculative, driven more by hype than by any intrinsic value. He believes it lacks fundamental value, a critical component for any sustainable investment. This puts him at odds with Bitcoin enthusiasts, who see the cryptocurrency as a revolutionary force. They envision a decentralized and transformative future for the financial world, driven by blockchain technology and digital currencies. Despite the enthusiasm, Fama remains unconvinced. He argues that Bitcoin's volatility and lack of regulation make it a risky proposition. While some businesses and individuals have started to adopt Bitcoin for transactions, Fama questions its practicality as a medium of exchange. He points out that for a currency to be effective, it needs to be stable and widely accepted, criteria that Bitcoin has yet to meet. Additionally, the energy-intensive process of mining Bitcoin raises environmental concerns, adding another layer of complexity to its adoption. Fama's academic rigor and analytical approach provide a counterbalance to the often exuberant claims made by Bitcoin proponents. As the debate continues, Fama's insights remind us to critically evaluate the promises and pitfalls of emerging financial technologies. Whether Bitcoin will fulfill its promise or falter remains to be seen, but voices like Fama's ensure that the conversation remains grounded in reality. In the end, the future of Bitcoin and cryptocurrencies will be shaped by a blend of innovation, regulation, and informed skepticism. As we navigate this evolving landscape, the wisdom of seasoned economists like Eugene Fama will continue to be invaluable. Fama's main argument against Bitcoin is simple: it has no intrinsic value. Unlike traditional assets such as stocks or real estate, which are backed by tangible assets or earnings, Bitcoin's value is purely speculative. He compares it to a Ponzi scheme. In a Ponzi scheme, returns are paid to earlier investors using the capital from newer investors rather than from profit earned. Its value depends solely on what others are willing to pay for it. This speculative nature means that Bitcoin's price can be highly volatile, driven by market sentiment rather than any intrinsic worth. This creates a dangerous bubble. When the market sentiment shifts, the bubble can burst, leading to massive losses for investors. He argues that real currencies have backing from governments. This backing provides a level of trust and stability that Bitcoin lacks. This gives them stability and utility. Government-backed currencies are supported by the economic strength and regulatory frameworks of their respective countries. Bitcoin, in contrast, relies on faith and speculation. Its value is not anchored by any physical asset or government guarantee. Fama points to Bitcoin's extreme volatility as evidence. The price swings wildly, often influenced by news, market trends, and investor behavior. This makes it a poor store of value and a risky investment. Investors seeking stability and long-term growth may find Bitcoin's unpredictability concerning. He believes Bitcoin will eventually collapse. As more people recognize its speculative nature, the demand may dwindle, leading to a sharp decline in value. He argues that its future is bleak. Without intrinsic value or government backing, Bitcoin's sustainability as a currency or investment is highly questionable. Bitcoin's price has been on a roller coaster ride. It has experienced meteoric rises followed by dramatic crashes. This volatility makes it attractive to speculators. They bet on its price movements. However, this same volatility makes Bitcoin unsuitable for everyday transactions. Imagine your morning coffee costing $5 one day and $20 the next. Businesses and consumers need stability. The lack of price stability undermines Bitcoin's claim as a currency. It's more like a speculative asset. Its value fluctuates based on news, sentiment, and market manipulation. Another challenge for Bitcoin is its limited acceptance. While some businesses accept Bitcoin, it's far from mainstream. Most transactions still happen with traditional currencies. Governments and central banks are wary of Bitcoin. They see it as a threat to their control over monetary policy. Some countries have even banned or restricted its use. Without widespread acceptance, Bitcoin struggles to function as a true currency. It remains on the fringes of the financial system. This limited adoption reinforces Fama's doubts about its long-term viability. Section 5. The Bitcoin Faithful, Counter-Arguments, and Hopes. Despite Fama's criticisms, Bitcoin has passionate supporters. They believe in its potential to revolutionize finance. They offer counter-arguments to Fama's points. They argue that Bitcoin's decentralized nature is its strength. It's not controlled by governments or financial institutions. This makes it resistant to censorship and manipulation. They point to Bitcoin's growing adoption, albeit slow. They believe it will eventually gain mainstream acceptance. They see its limited supply as a hedge against inflation. Section 6. 3. Futures. Worthless, gold, or currency. Predicting the future of Bitcoin is like predicting the weather. It's complex and uncertain. Just as meteorologists use various models to forecast the weather, financial analysts use different tools and data to predict the trajectory of Bitcoin. Both are fraught with challenges and can be influenced by countless variables. However, we can explore 3 possible scenarios, each representing a distinct future for Bitcoin. These scenarios are not exhaustive but provide a framework to understand the potential outcomes. First, worthless. Bitcoin collapses completely. Fama's prediction comes true. In this scenario, Bitcoin's value plummets to zero, and it is no longer considered a viable asset. The market loses faith, and the bubble bursts. The bubble bursts, and it becomes worthless. Investors lose their money, and Bitcoin is remembered as a failed experiment in digital currency. Second, digital gold. Bitcoin stabilizes and becomes a store of value. In this scenario, Bitcoin is seen as a digital equivalent of gold. It is not used for everyday transactions but is held as a long-term investment. Similar to gold, it acts as a hedge against inflation and economic uncertainty. People buy and hold Bitcoin to protect their wealth from the devaluation of fiat currencies. Third, currency Bitcoin achieves widespread adoption as a medium of exchange. In this scenario, Bitcoin is used for everyday transactions, from buying coffee to paying rent. It becomes a true global currency, challenging the dominance of fiat currencies. Governments and institutions recognize its legitimacy, and it integrates seamlessly into the global financial system. Each of these futures presents unique opportunities and challenges, and only time will tell which path Bitcoin will ultimately take. Section 7, Scenario 1, the zero-sum game. In this scenario, Fama is proven right. Bitcoin's price crashes to zero. Speculation dies down. The dream of a decentralized currency fades. This could happen due to various factors: government crackdowns, technological flaws, or simply a loss of confidence. Investors who bought at the peak would lose everything. The collapse would send shockwaves through the crypto market. It would validate the concerns of skeptics like Fama. It would serve as a cautionary tale about the dangers of speculative bubbles. Section 8, Scenario 2. Digital gold, a safe haven. In this scenario, Bitcoin survives, but its price stabilizes. It becomes less volatile. Investors see it as a store of value, similar to gold. Its limited supply and decentralized nature make it attractive as a hedge against inflation. During times of economic uncertainty, demand for Bitcoin rises. Bitcoin's price would still fluctuate, but not as dramatically. It would become a more mature asset. It would appeal to investors seeking long-term protection. Section 9, Scenario 3. Bitcoin as currency, a long shot. This scenario is the most optimistic but also the least likely. Bitcoin achieves widespread adoption as a medium of exchange. Businesses and individuals use it for everyday transactions. Governments and central banks adapt to the new reality. They integrate Bitcoin into their systems. The world transitions to a multipolar monetary system. This scenario faces significant obstacles. Governments are unlikely to cede control over monetary policy. The scalability of Bitcoin's technology is also a concern. Which scenario will play out? Only time will tell. It's essential to approach Bitcoin with a healthy dose of skepticism and a willingness to adapt. The future of money is uncertain, but one thing is clear: the debate about Bitcoin is far from over.